Hello, Bay Area real estate enthusiast. I am so excited to share my insights on the 2025 market trends and what we can prepare for. My responsibility is to get this information into the hands of you so that you can use it. So you can be confident and you don't have to guess when making very large decisions like buying or selling property. Being a part of a team with over 2 decades of experience right here in Silicon Valley, I've weathered numerous market cycles, and I'm here to guide you through what I'm calling the year of being healthier, like so many of our New Year's resolutions. So we'll start with big picture. 2025 is shaping up to be a year of transition. While change is coming, it's moving at a more measured pace than some might expect. The Bay Area, as always, dances to its own rhythm, often outperforming national trends. Here's the key market indicators that I plan on discussing in this very detailed analysis video. Interest rates, inventory, number of actual sales, prices, seasonal trends, and the impact of the new administration. So let's discuss those pesky interest rates. The consensus among leading national mortgage experts points to a stabilization of rates between 6.4% and 6.7%, signaling a new normal that buyers are gradually accepting. The Federal Reserve continues to tread carefully, striving to balance inflation concerns with economic growth. Zillow even acknowledges the difficulty in predicting exact rate movements. They guess rate might trend lower by the end of 2025. It is crucial to maintain realistic expectations about future rates. The optimism for 5% rates by the end of 2024 has dissipated, and the initial shock of the past 2 years have subsided. Many potential buyers are now deciding they can't postpone their plans any longer. And the era of 2 to 3% mortgage rates appears to be behind us for the foreseeable future, if not permanently. And remarkably, mortgage rates have consistently averaged above 6% for the past 2 years already. And for those keen on monitoring interest rate activity, keep a close eye on the 10-year Treasury yield. It serves as an excellent indicator of mortgage rate trends. Now we're going to talk inventory. Expect a gradual shift towards balance. We're projecting a 12 to 15% increase in active inventory compared to last year, and this is good news for buyers who've been struggling with limited options. However, it's important to note that we're still below the 10-year average. Were you aware that over half of the home buyers are current home owners? This is where the lock-in effect continues to play a significant role, with many homeowners reluctant to give up their low interest rate mortgages and electing to stay in their current home, taking away about half of our inventory. As a matter of fact, approximately 75% of homeowners with a mortgage have a rate below 5%, creating a disincentive to sell. However, life changes are gradually going to motivate more sellers to enter the market. In regards to home sales, I'm also anticipating a rebound, with closed sales potentially increasing by 8 to 10% year over year after the 4th consecutive year of the lowest national sales numbers in decades. This uptick reflects a combination of more sellers deciding to come up to the market and pent-up demand finally being unleashed as buyers adapt to the current market conditions. All right, prices. I know everybody is curious about home prices, and for good reason. In the Bay Area, we often see stronger performance compared with national trends. While experts project 3 to 4% increase nationwide, don't be surprised if our region experiences even more substantial appreciation. This national forecast is considered healthy and in line with historical norms. However, it's important to note that high prices and elevated mortgage rates have sidelined a significant portion of potential buyers. And surveys suggest that over 100 million American households currently can't afford home purchases, creating a substantial reservoir of pent-up demand for the future. In our unique Bay Area market, it's crucial to remember that tech salaries are approximately 20% higher than in other regions. And this local economic factor could further influence our housing market dynamics, once again driving stronger price growth compared to national averages. All right, now we're talking seasonal trends. In regards to seasonal trends, spring remains our peak season, with home prices gaining the most of their annual appreciation occurring between February and June. Inventory used to peak around August, but post-pandemic, we're seeing inventory peaks extend to later in the year, often into October or even November. And while it's tempting to wait for lower interest rates, rising prices suggest that acting sooner might save you more money in the long run. Securing a home while locking in today's home price and gaining future appreciation. Okay, I saved this one for last, the impact of the new administration. Of course, the newly elected president is heading into the next 4 years, and it's pretty much on everybody's mind. The Trump administration has gained significant executive order aimed at lowering the cost of housing and expanding housing supply. This initiative primarily focuses on new construction with the theory that regulatory costs account for approximately 25% of new construction expenses. Keep in mind that new construction is less than 10% of local sales. It's also crucial to understand that executive orders don't immediately go into effect. They must go through the legislative process and approvals. The interplay between federal initiatives and local regulations will likely shape the market's direction beyond 2025. So let's talk about where the opportunities lie. For buyers, the increasing inventory means more options for you. Yes, competition remains fierce, but more listings means more opportunities. For sellers, while competition may increase slightly, strong demand continues to support home values. Rising inventory doesn't necessarily mean falling prices, but could reduce upward pressure on home values. Sellers should focus on preparing their homes carefully to stand out in a slightly more competitive market. And for those interested in investment properties, 2025 presents some interesting opportunities. With the rental market slowing but remaining strong and home prices continuing to appreciate, real estate remains an attractive long-term investment. Stay tuned for future videos focusing solely on this topic. While we're not back to the unicorn market of ultra-low rates, 2025 does present a healthier, more balanced landscape. And remember, successful homeownership is more about time in the market than timing the market. Again, healthier is the best word to describe what's ahead. And that's a wrap on our 2025 real estate market deep dive. Remember, I'm here to educate and navigate, not speculate and fabricate. And if this video gave you some valuable insights, do me a huge favor and hit that subscribe button and share this with a friend who's thinking about buying or selling in 2025. Or drop a comment with your biggest real estate question or prediction for this year. And lastly, if you're looking for personalized guidance on your specific situation, don't just wonder, let's connect. Shoot me a direct message. Whether you are a first-time buyer looking to invest or considering selling, we've got strategies tailored just for you. Let's turn your real estate goals into reality. Talk soon.